Ex-BlackRock director says Bitcoin Spot ETF in 3 to 6 months. Take a look at this panel. They explain there has never been such anticipation and excitement ever for an ETF approval.
To get straight into it, I'd like to ask the panel to briefly introduce yourselves, what you do, what the company that you work for does, and whether the SEC giving a nod on a spot ETF, this is the easiest question you'll answer all day, whether it's going to be a positive or a negative for Bitcoin overall. Christoph.
I'll start with that, positive. Good afternoon, everybody. Thanks for joining us over lunchtime. My name is Christophe Duracell. I'm a managing director at Numius. We are a diversified crypto investment firm, active across venture, prop trading, hedge funds, and asset management. Our asset management arm is called Fortius. It's backed by Schroders. And we've recently launched our first two funds, fund to funds, and a long-only product as well.
Thank you. Martin?
So Martin Bednall, I'm the CEO of Jekyll Asset Management. We launched the first spot Bitcoin ETF in Europe last month, listed on Euronext Amsterdam. And so in terms of the question about a spot Bitcoin ETF in the US, I think it's going to be hugely positive. And that's because I think the SEC will probably approve all the applications at the same time. I don't think they're going to want to give anybody first mover advantage. And I think what that will mean is because BlackRock is there in the mix, and this behemoth, they will put a lot of their power behind it in terms of sales and distribution to really make sure that they get the sort of go-to ETF, the default ETF. So my background is I am ex-BlackRock, so I have some insight into this, in the fact that when Vanguard came to Europe with their ETFs, there was comments internally at BlackRock made that they wanted to kill the baby in the bathwater, and so basically not allow Vanguard to get any AUM at all, even when they were don't let them get anywhere. So I think they'll probably go with that same approach. And if you've got the power of BlackRock promoting Bitcoin and digital assets, I think that has a major knock-on impact for other products, for other regulators to approve it, and just a real groundswell.
Thank you so much. Steve, can we come to you?
My name is Steven Schoenfeld. I head market vector indexes. We are headquartered in Germany and operate around the world. We have about $30 billion of licensed assets tracking our indexes, and we were a digital asset pioneer, launching our first crypto indexes way back in 2017, which is like 40 years ago in crypto years. We have very substantial capabilities in digital assets, a number of innovative products, and I look forward to speaking about those. We have more than 20 clients with products, including ETNs and ETFs on Bitcoin and Ethereum. As far as the approval in the US, I agree that it's very likely to be that all will be approved. I will disagree with my former colleague Martin. As much as BlackRock will try to crush the competition, it's going to be a very different environment because there's a good half dozen, maybe even 8 or 9 other firms deeply committed to tradable digital assets. They've all got applications in, and some are actually much closer to the crypto ecosystem than BlackRock. So I think BlackRock will be in for quite a fight, but that will still be very, very positive for the overall Bitcoin and crypto ecosystem. I think the AUM potential could double or triple the current amount of AUM in current Bitcoin products.
So can I just add? So I've been working in ETFs for over 15 years, and there's never seen so much anticipation around a product launch, around a product approval. So I think it just all leads itself. And And yeah, I mean, what you say is right. There's, I don't know, what is it, 14 applications or something like that?
Oh, and by the way, BlackRock didn't exactly crush Vanguard in Europe either.
No, they didn't. They weren't successful, but they tried. The point was that they put the efforts behind it. And I think, having so many, people coming to market at the same time and having that battle and what BlackRock will try and do in that battle, I didn't say they'd be successful. I said what they will do is, put their efforts behind it. And I think there'll be enough to go around for plenty of them. But if I was a betting man, they will have the bulk of the AUM compared to.
What do you guys think about? Sorry to interrupt, but I'm really curious about the timing of the application. What was it? Because you had all these beautiful bull markets. There were better times, to put in an application for a spot ETF than when BlackRock actually went ahead. So what do you guys think about that? What's kind of driving that decision?
Well, I think that well, first of all, crypto markets as a whole. If you look 5 years, I don't know how long you guys have been in the crypto game, but if you look 5 years back, we would never have had a panel like this with this title. Okay, so crypto markets are maturing exponentially. I would say institutional investors are becoming more familiar with the asset class. So there's obviously demand from investors. But if you're an institutional investor, let's say you're an endowment or a pension fund that wants to put $2 billion into Bitcoin, up until recently, you would have to go through a crypto-native OTC desk, or even do something a little bit bespoke with a crypto hedge fund. So it's quite complicated. So this is really like a really good access play to be able to launch a spot, spot BTC product. The other thing is, I think maybe when it launches, things will be a little bit more nuanced than everybody's expecting, because, the assets that we're seeing in what I would consider maybe an inferior product, the derivatives-based ETFs, where investors are penalized by the futures rule up to 8% per annum, on Bitcoin. We're going to see a shift of assets from that product over to the spot Bitcoin product. So overall, I think it's, as I said earlier, it's super positive. Maybe a little bit more nuanced than people expect, but as a whole for the industry, it's very bullish.
And any thoughts on the timing? You think it's to do with the sort of maturing of the institutional appetite? Any other thoughts from you guys?
So I think 2 weeks ago I would have said 9 to 12 months away. This is for the U.S. approval, but sitting here today, I'd say it's closer 3 to 6 months. There, for the first time, it was just last week, the SEC, instead of completely rejecting the whole list, they've actually asked for comments, which is a marginal but significant improvement in the dialogue. There's also the Grayscale lawsuit, which the SEC lost, which means they're most likely going to have to allow the Grayscale, the GBTC, to be converted into an ETF. I don't think the SEC wants that to happen and then have the ETF filing still waiting. People should also remember the size of GBTC is over 20 billion, so that alone will be a huge contribution to the asset class. So if
there are no outflows.
Well, there could be, yes. Well, there will be outflows. People have been trapped in it, but they'd be outflows at NAV.
It's about 3%, right, of the
and if I had $1 billion in GBTC that's charging 2%, I would also move it to the Van Eck Bitcoin ETF, which is going to charge 65 basis points. So either Grayscale's going to adjust their pricing, or they will have outflows, but it will be in the ETF ecosystem.
So I agree. The mood music has definitely changed, right? From through the loss of the Grayscale case and the Ripple case. And I think your question though was, why an application now? The timing of the application, not necessarily the timing of the approval. And BlackRock has very much changed its tune over the years of it being Bitcoin being an index for money laundering. I think Larry Fink said that. I'm not quite sure how many years ago. To now him saying it's a global asset, a form of digital gold. So that's taken some time to get there, and I'd say that BlackRock are very close to the regulators around the world as well. They have a big team in their regulatory arm and talk often to the regulators. So they must be getting soundings there. And so, again, that's an indication of the mood music changing and the SEC getting closer to approving one of these, because otherwise BlackRock wouldn't have bothered.
I think you raise a really good point there, because there's a big focus on BlackRock. You have to consider their connectivity. So you mentioned, they're close to the regulator, but also their connectivity across the investor space, speaking with endowments, pension funds, et cetera. They're going to be, if they manage to launch the ETF, the sort of go-to shop to, help these people on their journey. Yeah, no, but help these allocators on their initial journey into the asset class. So, I think that's, again, a really positive thing.
Do you guys worry at all about the whole kind of buy the rumor, sell the fact dynamic? It's one of those financial markets quirks, isn't it? That everyone, Martin, you mentioned that this is the most anticipated product launch probably in the ETF space. Are there any risks there that we are being a bit more bullish than the immediate aftermath, perhaps?
Well, I think the conversion of Grayscale is probably one of those where people might have felt trapped and want to get out. Do they move to Van Eck or another one, or do they just get out? Is a potential, that's a bearish factor. I think we've just got a challenge in terms of digital assets around the macro environment and the interest rate environment. In conversations, and I'm pretty new to this, so I'll hold my hand up that, but when conversations we've had with large institutions, they say things like, why would I go into a risky asset that I don't fully understand when I can get 5-6% in treasuries, right?
Treasury is
and so it's a huge hurdle as well. So there's absolute bullish signals, but there's still a bearish environment that the approval may be launched into.
Yeah, I was just going to say that I think it was yesterday that 10-year yields hit their highest since 2007, right? So that's not very bullish for a risk asset, for the risky assets.
But I think a lot more of this dynamic is going to be pure supply and demand. First of all, the excitement over Bitcoin futures, it happened at one of the peaks. We're now at minimum in a trough. And Bitcoin seems to have held very well, despite all the scandals that are being thrown at it, including FTX. But the sheer size of the US institutional market and financial advisor market, self-directed retail investors, it's enormous. And to have a product that will be accessible to them I'm not going to say it will move the price, but the assets will move into these products. We've estimated, using some of the statistics that came from when the gold ETF was launched in 2004, if anything close to that occurs with Bitcoin and potentially Ethereum spot ETFs, this could be 150 to 200 billion of inflow into these products. That swamps.
In a year? Sorry, what's the time?
Yeah, over 3 years.
Over 3 years.
It doesn't happen all at once. That's 3 to 4 times the size of the current product set for listed Bitcoin. So that will be very significant. With regard to yield, Bitcoin, like gold, doesn't have a yield, but Ethereum has rewards. We've recently introduced a staking reward index that is equivalent to a total return index in a bond. So it's inevitable that some of the ETF issuers will have a rate of return on a spot Ethereum. And other products will be developed, including hybrid products that combine crypto with fixed income so that there can be a yield, indexes that have timing. The ability of the ETF industry and the structured product industry to use their creativity to come up with solutions to what investors want is going to blossom. And I think that's what part of the anticipation is about as well.